Hey guys, it's Jeff Trapp here with the Jeff Trapp podcast and the Tax Planning Pros. I am so glad that you've decided to join me today. And oh my gosh, Q3 went by so fast, and I can't believe we are almost to Q4, which is the high time for tax planning and tax planning season. It really shouldn't be, but most humans and most people are procrastinators. And a lot of times they look at the income they've earned throughout the year and they're like, oh, shoot, I haven't done anything yet for planning for taxes for 2025. I better hop on the phone with a tax strategist and figure out what we can do to save you money on taxes. And so if that's you, that's not an enviable place to be in, because you're going to have to make a lot of decisions really quickly, because the cost of inaction the first 9 months of the year has maybe cost you several thousands or hundreds of thousands of dollars, possibly in taxes or tax savings. But thank goodness we still have a couple of months to do something, right? You don't want to be like those folks who wait till the end of the year and it's Q1 and they said, shoot, I didn't do anything for 2025. And there's not a ton you can do once the year is over. And so today, what I want to talk about are some tax strategies that you can implement before year end. And you're going to have to maybe deploy capital or do things really quickly to make that happen. So some things I want to talk about today, just in terms of what we want to look at for year-end tax planning, what you should be talking to your tax strategist or CPA about. And if they've never heard of any of these things, and you are with the wrong person and they work for the IRS and they do not work on your behalf to help you keep more of your hard-earned money. So we're going to go through about 8 or 9 different things here to help you out. So one thing that you want to look at are tax advantage investments. So if you own a business or you're a W-2 person, what are some things that you can invest in that are going to give you those tax write-offs and things that you need? Now, with the big, beautiful bill, there's a lot of neat things in there that can help advance your tax strategy. So they renewed the R&D tax credits, the research and development credits. So if you're investing in research and development for your business, or if you're investing in businesses that have those things, can we get some credits that flow out to you? We've got the 100% bonus depreciation is back. And a lot of my clients are really excited about this, because a lot of investing in business, it revolves around 100% bonus depreciation and utilizing those losses to offset your taxes. You can also look at solar, right? Solar tax credits. Now you have to the end of the year to invest into solar and solar tax credits, because the green energy tax credits are gone after this year. But those are some things that you can look at. You know, if you have high capital gains, you might want to look at opportunity zone funds and investing in those types of business. So those are some great ways to bring down the tax liabilities. Number 2, you might want to look at real estate strategies and how you might become a real estate professional. Now, we get a lot of folks that come to us that say, well, Jeff, I don't qualify for the 750 hours, right? Because in order to be a real estate professional, you have to work 750 hours in real property trades or businesses. And then you have to material participate in your property that you own. And that's typically a minimum 100 hours per year, or working more on that property than anybody else in order to qualify. So a lot of folks don't qualify for that, or maybe they can get a spouse to qualify that, a non-working spouse. Now, if that's not the case, they can look at the short-term vacation rental strategy. And that is more of your Airbnb type homes, where possibly you could qualify if you rent that home on 7 days or less on average, to write that off on your taxes and take advantage of cost segregation to accelerate that depreciation. So those are some things that you can look at when it comes to real estate. Now, are you looking at retirement and compensation planning? What are you doing in terms of paying yourself too much, too little, the right amount? Are we overpaying the payroll taxes? That's something important to look at, especially on our S Corp owners. You want to make sure you're paying yourself. And then you want to make sure that you are maximizing your retirement contributions at least up to your company match. And then, we decide other alternatives once you are at that stage. So one of those things that you want to look at is, where do we want to maximize? Do we want to put those in our tax deferred accounts, right? Like our 401ks or traditional IRAs, or do we want to put those in our accounts where we've paid tax today, like our Roth IRAs and Roth 401ks and things like that? Or do we want to look at other alternatives to retirement investing? So there's a lot of different neat things you can do there. Now, if you have a high deductible health plan, you might want to look at health and flexible spending accounts to maximize your tax deductions. Typically, when you contribute to those types of programs like those HSAs and FSAs, if those monies are spent, doesn't have to be this year, but at any year, on medical expenses, then you don't pay tax on those funds. So you get a tax deduction today. You can pay for your medical expenses. It'd be really, really neat opportunity. Some other things that you might want to look at are charitable giving strategies. There's a lot of strategies out there, some that are legitimate, some that are not. So you want to work with a qualified professional, but are we looking at donor advised funds, right? Are we looking at contributing cash or non-cash charitable donations? There are donation programs out there that will give you more favorable deductions. So are you maximizing all those deductions? And then, something else that you might want to look at is strategic income deferral and timing. So one of the things that we take a look at is, can we defer salary, or can we defer when you're going to receive income from maybe somebody that you do business with? You're a business owner, right? Can you defer that money to come into Q1 2026 versus Q4 2025? How do we align those things? How do we time those things so that we can save you the most money on taxes? Because it's a lot better to have 12 months of next year with that income to plan than 2 to 3 months of 2025 to plan that income. Now, one of the things that we want to look at because of the big, beautiful tax bill is state and local tax planning. So that's our SALT deduction, right? So if you're making below $500,000, you can deduct up to $40,000 of state and local income taxes for the next 4 years through 2029. But that income has to be below that $500,000 threshold. So one of the things that you want to look at is, hey, should I be taking this deduction at the business level? How can I maximize it at the personal level? How can I get my taxable income below $500,000 to really, really maximize that? And so you want to utilize some of these strategies that we've already talked about to bring that income down to maximize that deduction. Now, I know I just went over a ton of things and that probably went over your head. I get it. Taxes aren't for the faint of heart. The tax code is 70,000 pages long, and that's just estimated. It's probably more. And no, I have not read every single page of the tax code, but I've read a lot of the tax code and gone through a lot of different strategies and planning, and we've been able to optimize that for our clients. So it's super, super important that when you're trying to implement these strategies, that you work with a tax professional and a tax advisor who understands planning and minimizing your income tax due. Now, if you're not meeting with your accountant, tax strategist, at least maybe 2 to 6 times a year in discussing these things and being proactive, then you don't have a tax strategist, right? And so they are working for the IRS. And, if they're saying keywords like, well, you made pretty good money last year, so it's okay that you write that check to the IRS, then that's not a tax strategist. So make sure you're working with the right professionals. And if you don't have one, feel free to book a call with us below at the Tax Planning Pros. We'd love to chat about your tax situation to see if maybe we can help you out and lower that tax bill. So if you found this episode helpful, or if you know of somebody who might enjoy this episode about learning how they can save money on taxes as we round out this tax year And as we head into Q4, then please share that with them, like it, review our show. And once again, I'm Jeff Trapp with the Jeff Trapp Podcast and the Tax Planning Pros. I hope you have a wonderful day. Bye-bye.